Harmony delivered a stellar set of interim results. Our underground recovered grades increased to 6.4 grams per tonne, ahead of our full-year guidance. Group production was about 25,000 kilograms or 800,000 ounces for the first half, also ahead of guidance. Our all-in sustaining costs remains well controlled and on track to beat guidance too. In rand terms, all-in sustaining costs was about 972,000 rand a kilogram, or just under 1,690 US dollars per ounce. All-in costs for the reporting period, which includes our major capital, was just over 1 million rand per kilogram, or $1,810 per ounce. And it's because of our relatively low capital intensity that this is not much higher than the all-in sustaining costs. We generated record interim operating free cash flows of 10.4 billion rand, or 579 million US dollars. The operating free cash flow margin has expanded to 29% as a result of our investment in quality ounces and, of course, the high gold price we received. Our headline earnings per share has grown by 33% to 12.70 rand per share, or 71 US cents per share, and we are delighted to announce a record interim dividend payout of 1.4 billion rand for the half year. To maximize value, we have grouped our assets into 4 quadrants, each with its own risk profile and specific role in contributing towards our growth strategy. These quadrants are, firstly, our South African high-grade underground assets, our high-margin, low-risk South African surface and tailings retreatment operations, our international copper, gold portfolio, and our South African underground optimized assets. With our specialized mining skills and unique operating model, we believe we are well positioned to unlock further value in our gold and copper assets going forward. We at Harmony are on an exciting growth path and have clearly mapped how we will achieve our plans. Maintaining a disciplined and responsible approach to capital allocation is critical in creating long-term value. Not only does this drive growth, but it increases shareholder and stakeholder confidence. We have a balanced capital allocation framework focusing on 5 core areas to ensure alignment with our values and our goals. We will always prioritize safety as we work towards zero harm. This goes hand in hand with productivity enhancements and is in line with our belief that a safe mine is a profitable mine, not the other way around. We have built a strong balance sheet, which is in a net cash position, and our major capital is directed towards de-risking our portfolio by investing in our higher grade, surface, and international assets, all aimed at increasing the quality of our ounces and improving our margins. This is evident in our expansion projects at Mponeng, Moab Khotsong, our South African surface retreatment operations, and Eva Copper. Value creative M&A is intrinsic to our strategy, and we are actively pursuing opportunities to improve the quality of our portfolio further. We are in a position to pay a consistent dividend in line with our dividend policy, ensuring that we reward our shareholders alongside achieving our growth aspirations. Our approach to capital allocation is reaping the necessary rewards, and we intend maintaining this disciplined approach. Our aim is to improve the quality and profitability of our portfolio over time, ensuring higher quality reserve conversions with improved free cash flow generation. Harmony has taken the strategic and deliberate decision to invest only in gold and copper. These complementary metals offer counter-cyclical diversification and provide a natural hedge against volatility. The combination offers a strategic balance between safe haven investment in gold and global demand for copper. They also offer synergies in production, particularly in geological proximity in copper-gold porphyries like Wafi-Golpu. Both these metals have solid fundamentals driving demand and growth, which tie in well with our project pipeline. By focusing on these 2 metals, we are creating a focused, efficient, and more profitable Harmony with exciting long-term growth prospects. As we mine out the optimized assets and bring on quality replacement and growth ounces, we expect the contribution from these marginal assets to decrease to around 9% of production over time. In turn, our international gold copper, the South African surface source operations will represent a far larger portion of production, offering a lower risk asset portfolio. This clearly illustrates how we have re-engineered the company. To ensure we achieve this plan, we are allocating the bulk of our major capital towards these projects that will result in margin expansion. For this financial year, we are investing over 2 billion rand at our high-grade projects, Moab Khotsong and Mponeng. We have over 1 billion rand earmarked for our high-grade or high-margin surface operation projects, mainly at Mine Waste Solutions. The Eden Valley Mine has been allocated close to 600 million rand, and studies are underway to determine if we can extend the life further by expanding existing tailing storage facilities. This demonstrates our clear intention to improve the quality of our portfolio whilst paying dividends at the same time. The acquisitions of Mponeng, Moab Khotsong, and Mine Waste Solutions were transformational for Harmony. This is evident in our overall improved results. We are therefore investing in these transformative assets to ensure they continue creating value for years to come. Phase 1 of Kareerand Tailing Storage Facility expansion at Mine Waste Solutions was delivered on time and on budget. Phase 2 is currently underway, and we expect to have it completed before the end of calendar year 2025. Mine Waste Solutions steady-state production is over 100,000 ounces over its life per annum. The projects at Moab Khotsong and Mponeng are progressing well and will extend the lives of these mines to at least 20 years. These projects have added a combined 5.2 million ounces of gold reserves and will ensure steady-state production at Moab Khotsong of over 200,000 ounces and at Mponeng of over 250,000 ounces per year. Both mines will deliver an average recovered grade of about 9 grams per tonne. These projects demonstrate our commitment to gold mining in South Africa, ensuring that they continue delivering excellent margins at a low all-in sustaining cost for years to come. The feasibility study update at Eva Copper is progressing well. We have completed the technical aspects and are awaiting the final permitting amendments. Eva Copper is now expected to produce between 55 and 60,000 tonnes of copper per annum and 14,000 ounces of gold as a byproduct over its 15-year life of mine. Conceptually, this translates to a mine of a similar size to some of our high-grade underground assets. The all-in sustaining cost is anticipated to be in the middle of the global industry cost curve, and we are targeting first copper in 2029 calendar year, subject to the completion of the study and board approval.
Harmony delivered an exceptional financial performance and outstanding earnings growth during this interim reporting period. This was on the back of operational consistency and a higher average gold price received. Group revenue increased by 18% to 37 billion rand, mainly due to the 23% increase in the rand gold price. Net profit increased by 33% to 7.9 billion rand, while the rolling 12-month EBITDA increased by 28% to over 22 billion rand. The strong operating free cash flows we continue to generate resulted in our balance sheets shifting further into a net cash position of 7.3 billion rand. Headline earnings per share increased by 33% to 12.70 rand. Harmony's investment in quality ounces has resulted in record operating free cash flow generation in this interim period. We've also delivered an impressive threefold expansion in margins since FY22. Total operating free cash flow for the group increased by 46% to 10.4 billion or $579 million in the first half of this financial year. While the gold price has been a significant tailwind, our ability to deliver to plan, alongside the transformation of our portfolio, has enabled us to deliver yet another strong financial performance. High operating margins have boosted our balance sheet, and we're well positioned as we head into the second half of this financial year. This is evidenced in our ability to produce to plan and the higher gold price we received rather. Gold prices have further increased to around 1.7 million a kilogram compared to the average of 1.4 million per kilogram we received during this reporting period. Our planned FY25 total capital intensity remains affordable at around 225,000 Rand a kilogram or $415 an ounce. We continue to protect and lock in margins through an effective hedging program. We typically hedge between 10% and 30% of production over 36 months as per our 30-20-10 program limit.